There's a strip of water in the Middle East that most people couldn't find on a map. It is not wide. At its narrowest, it is just over 30 kilometers across. You could drive that distance in less than 20 minutes on an open highway. And yet, on a single Monday in the spring of 2025, events unfolding in and around that strip of water moved stock markets across 3 continents, pushed oil prices sharply upward within hours, sent emergency alerts to the phones of millions of civilians in some of the world's wealthiest cities, and prompted the President of the United States to issue one of the most severe public warnings in recent memory. That waterway is the Strait of Hormuz, and what happened there, or near it, or because of it, on that day, raises questions that go far beyond the immediate exchange of missiles and naval confrontations. It raises questions about how the global economy is structured, about the strategic logic of regional powers, about the limits of deterrence, and about what happens when a fragile ceasefire begins to unravel before the ink has had time to dry. To understand those questions, we need to set aside some of the most dramatic framings that emerged in the immediate hours after the events. We need to slow down, look carefully at what is actually confirmed, what is reported but unverified, and what remains genuinely unclear, because the gap between those 3 categories in this situation is significant. Let's begin with what the evidence actually shows. Early reports on that Monday indicated that the United Arab Emirates had activated its missile defense systems, an event described by UAE officials as the first such activation since a ceasefire between the United States and Iran had taken effect on April 8th. The UAE's defense ministry issued statements indicating that air defenses were engaged with what it described as ballistic missiles, cruise missiles, and what military terminology calls loitering munitions, a category of weapon sometimes referred to as kamikaze drones, designed to circle a target area before striking. According to those statements, 3 of these loitering munitions were intercepted over UAE territorial waters, while a 4th missile reportedly fell into the sea without causing damage. These are the facts as stated by UAE officials. What they tell us is that something happened, that UAE air defense systems were activated and engaged. But they do not, on their own, confirm the full picture of what that engagement involved or what its ultimate effects were. What is reported but carries more uncertainty is the attribution and the scope. A social media account associated with Iran's Islamic Revolutionary Guard Corps, the IRGC, appeared to claim responsibility, posting what it described as imagery of drone strikes, including what it claimed was an attack on UAE's port of Fujairah. Iran's state media, for its part, denied separately that Iranian naval vessels had been sunk. These are claims made by parties with obvious interests in shaping the narrative. Neither should be accepted uncritically. From the American side, Admiral Brad Cooper, who leads U.S. Central Command, stated in a call with reporters that American forces had eliminated 6 small Iranian boats that were, in his framing, attempting to interfere with commercial shipping in the Strait of Hormuz. This is a significant statement. It represents a direct U.S. military action against Iranian assets. And yet Tehran denied it happened. When 2 parties describe the same events in fundamentally contradictory terms, that is itself a data point worth examining. We will return to why. President Trump, in a television interview later that day, issued a warning that Iran would face severe consequences if it targeted U.S. ships protecting commercial vessels transiting the strait. The language was explicit and public, which is itself a choice, not an accident. Stock markets moved, oil prices rose. These are not interpretations, they are observable market reactions that reflect the collective judgment of thousands of investors processing the same information simultaneously. Now, here's where it is worth pausing, because the immediate narrative that formed around these events, that this was a sudden, dramatic escalation out of nowhere, misses something important. These events did not occur in a vacuum, and the framing of a ceasefire on the verge of collapse suggests a stability that, in truth, had always been fragile in ways that deserve careful examination. The ceasefire in question began on April 8th. That is, at the time of these events, it had been in effect for less than 2 weeks. Ceasefires reached in the Middle East under conditions of active strategic competition rarely hold cleanly in their early phases. The history of such arrangements, from the various pauses in conflicts across the region over the past several decades, suggests that the immediate post-ceasefire period is frequently characterized by testing behavior, by low-level provocations designed to probe the limits of what the other side will tolerate, to signal continued resolve without triggering full escalation, and to shape the terms of whatever political arrangement might follow. There appears to be a pattern here, and it is worth saying explicitly that patterns are not predictions. History does not repeat exactly. But if you examine the behavior of the IRGC specifically across the past 20 years, What you find is an institution with a documented doctrine of operating through what strategists sometimes call the gray zone, actions that are deliberately calibrated to remain below the threshold of what would trigger a conventional military response, while still achieving strategic effect. Harassing commercial shipping, deploying proxies, claiming deniability while signaling capability. The events of that Monday, if the accounts are accurate, fit a recognizable template. They are aggressive enough to signal that the IRGC has not been neutralized, has not been forced to fully stand down, but they are not, at least based on the initial reports, the kind of mass strike that would constitute an unambiguous act of war requiring immediate large-scale retaliation. This is, from a strategic perspective, a particular kind of message, and understanding who that message is actually addressed to is more complicated than it might initially appear. Consider the geography first because it shapes everything else. The Strait of Hormuz is the narrow passage connecting the Persian Gulf to the Gulf of Oman, and from there to the broader Indian Ocean. On one side sits Iran, on the other, the coastlines of Oman and the UAE. At its narrowest, the navigable shipping lanes are constrained to an area that leaves very little margin for the kind of maneuvering that would allow large tankers to avoid a threat. This is not an accident of geography that anyone discovered recently. It has been known for decades, and it is precisely why the strait has been central to energy geopolitics since the 1970s. Approximately 1/5 of global oil consumption moves through this waterway. The exact figure fluctuates with global production levels and consumption patterns, but the scale is consistent. When analysts and policymakers talk about energy choke points, the Strait of Hormuz is generally understood to be the most consequential single point of vulnerability in the global energy supply chain, not because it is the only route through which oil moves, but because of the volume and the concentration, and because, unlike some other choke points, there are limited bypass alternatives that could absorb a significant disruption quickly. The UAE itself sits at a peculiar intersection. It is simultaneously one of the world's major oil exporters, a significant transshipment hub, and home to some of the most heavily trafficked commercial ports in the region. Abu Dhabi National Oil Company operates infrastructure that feeds into the strait. Port Fujairah, specifically, which the IRGC appeared to claim had been targeted, sits on the Gulf of Oman side of the Emirati coastline, outside the strait itself. This is not an incidental detail. Fujairah has been developed precisely as an alternative route for Emirati oil exports that bypasses the strait, reducing dependence on a waterway that could theoretically be contested. The fact that it was allegedly targeted, if that claim is accurate, suggests awareness of that strategic function. None of this makes a strait closure likely, but it is important to understand why the possibility, even as a tail risk, moves markets. It is not irrational fear. It is a rational response to a genuine structural vulnerability in global energy infrastructure. To understand what Iran might actually be trying to achieve, it is necessary to resist the temptation to interpret its actions purely through the lens of irrationality or miscalculation. That framing is common, and it is often wrong. The Islamic Republic of Iran, and the IRGC in particular, operates according to a set of strategic calculations that have their own internal logic that is not always aligned with what outside observers might consider rational, but that reflects a coherent set of priorities and threat perceptions. From Tehran's perspective, and this is an attempt to understand that perspective, not to endorse it, the pressure it faces is existential in nature. Severe economic sanctions have constrained the Iranian economy for years. The nuclear negotiations that had once appeared to offer a path towards sanctions relief have moved through multiple cycles of agreement and breakdown. The regional landscape has shifted in ways that Iran views with concern. Normalization agreements between Gulf states and Israel, increasing integration of U.S. military presence in the Gulf, and the perceived encirclement of Iranian influence. In this context, the IRGC's capacity to threaten commercial shipping in and around the strait is not merely a military asset, it is a political one. It is leverage. It is the ability to say, whatever pressure you apply to us, we retain the capacity to impose costs on the global economy that extend far beyond our own borders. It is a form of deterrence, but also a form of negotiation. Whether the events of that Monday represent a deliberate strategic decision by Iran's leadership, a decision by IRGC commanders with some degree of autonomy, or something more ambiguous, a signal sent to multiple audiences simultaneously, is genuinely unclear from publicly available information. And that ambiguity is itself significant, because it creates uncertainty on all sides about how to respond. There is a dimension to this situation that rarely receives the attention it deserves in immediate reporting, and that is the narrative dimension, the contest over how events are framed and what interpretations gain traction. Iran denied that its naval vessels were sunk. The U.S. confirmed that it had eliminated Iranian boats. The IRGC claimed successful strikes on UAE territory. The UAE confirmed air defense activations but did not confirm damage. These are not simply competing accounts of the same events. They are parts of a narrative contest in which each party is attempting to establish a version of reality that serves its strategic interests. For the United States, confirming the elimination of Iranian boats while President Trump issues a public warning serves a deterrence function. It signals resolve and capability to both adversaries and allies in the region. For Iran, denying losses while claiming successful strikes preserves domestic credibility and avoids the appearance of having been defeated. For the UAE, describing effective interception without confirming damage signals resilience while potentially leaving diplomatic space for de-escalation. None of these actors is simply reporting facts. They are shaping perceptions, and this is important to bear in mind when consuming any information emerging from an active, confrontational environment. The most important thing is not to simply choose which narrative to believe, but to recognize that all of them are partial, all of them serve purposes, and the truth lies somewhere in the space between them. This is also, incidentally, why market reactions to geopolitical events are interesting indicators but imperfect ones. Markets respond to narrative as much as to underlying reality. The spike in oil prices on that Monday reflected uncertainty, an expectation that the situation might deteriorate further, more than it reflected an actual reduction in supply. Let us consider the historical parallels briefly, because they are instructive, though not determinative. The tanker war of the 1980s offers one parallel. During the Iran-Iraq War, both sides attacked commercial tankers in the Gulf, attempting to use economic pressure as a weapon of war. The United States eventually reflagged Kuwaiti tankers and deployed naval escorts, a strategy that brought U.S. forces into direct confrontation with Iranian assets, culminating in Operation Praying Mantis in 1988, in which U.S. naval forces destroyed a significant portion of the Iranian Navy in a single engagement. The lesson sometimes drawn from this period is that U.S. naval power ultimately constrained Iranian behavior. The lesson more carefully drawn is that it did so at the cost of sustained naval deployment, significant diplomatic complexity, and one of the largest naval battles the U.S. had fought since World War II, and that Iran rebuilt its naval and missile capabilities significantly in the decades that followed. A second parallel, the period of maximum pressure in 2019 and 2020, when the United States withdrew from the Joint Comprehensive Plan of Action, the Iran nuclear deal, and reimposed sanctions. That period saw attacks on oil tankers in the Gulf of Oman, the downing of a U.S. surveillance drone by Iran, and a strike on Saudi Aramco facilities in Abqaiq that temporarily knocked out roughly 5% of global oil supply. The pattern in that period was one of calibrated escalation, Iran probing the limits of U.S. tolerance without triggering direct military confrontation, while maintaining deniability or using proxies. The current situation has structural similarities. A third parallel, more distant, the Suez Crisis of 1956, in which a confrontation over a waterway, Egypt's nationalization of the Suez Canal, rapidly became a geopolitical emergency involving multiple great powers. The lesson there is less about the waterway itself and more about how quickly a regional confrontation over infrastructure can escalate to involve actors far beyond the immediate parties when the stakes touch something as fundamental as global commerce. History does not repeat exactly, but these parallels suggest that the combination of a contested chokepoint, overlapping great power interests, and an actor willing to use threat of disruption as leverage is not a new configuration, and that the outcomes of such configurations are rarely either as catastrophic as the most alarming projections or as easily resolved as optimists hope. What does the economic dimension actually look like when you examine it carefully? The immediate market reaction, falling equities, rising oil prices, is consistent with how markets typically respond to geopolitical uncertainty in energy-producing regions. It does not, on its own, indicate a judgment that a sustained supply disruption is likely. Markets price possibilities, not certainties, and the implied probability embedded in a price move can shift rapidly as new information emerges. A sustained closure of the Strait of Hormuz, meaning a scenario in which commercial shipping was genuinely unable to transit for days or weeks, would have significant economic consequences. Estimates of what a full closure might mean for global oil prices vary considerably depending on assumptions about strategic reserve releases, alternative routing, demand destruction, and political responses. Some analyses have suggested price spikes of 50% or more in a sustained disruption scenario. Others are more conservative. The range of estimates itself reflects the genuine uncertainty involved. What is clearer is the distributional impact. Countries in Asia, particularly Japan, South Korea, India, and China, are among the most dependent on Gulf oil transiting the strait. A disruption would hit those economies asymmetrically compared to the United States and Europe, which have more diversified supply sources and larger strategic reserves relative to consumption. This creates divergent incentives among major powers in responding to a crisis, and that divergence is part of the strategic calculus that any actor contemplating disruption of the strait would factor in. The economic dimension also interacts with the political dimension in ways that are not always visible. High oil prices generate revenue for oil exporting states, including Iran itself, to the extent that sanctions do not prevent that revenue from flowing. There is a complicated arithmetic here. Iran's capacity to threaten shipping is simultaneously a threat to global economic stability and, paradoxically, a potential source of revenue if oil prices rise. This does not mean disruption is in Iran's economic interest. A full closure would damage Iran's own access to the strait, but it complicates simple framings of who benefits and who loses. It is worth giving serious weight to the arguments that push back against the most alarming interpretations of these events. The UAE's air defense systems, by the account of UAE officials, performed their function. Missiles and drones were intercepted. The fourth weapon reportedly fell into the sea without causing damage. This is not a picture of a country whose defenses were overwhelmed. It is a picture of a country whose defenses were tested and held. The U.S. Navy's presence in the region is substantial. U.S. Central Command's swift confirmation of the elimination of Iranian naval assets signals active engagement and capability. Whatever the full picture of that engagement, the rapid response time suggests that the U.S. military was not caught off guard. The ceasefire, as fragile as it may be, had not been formally declared dead as of the immediate reports. The White House had not confirmed that the events constituted a violation. Diplomatic channels, even in the most tense environments, rarely close entirely, and the absence of an immediate escalatory response from Washington beyond the president's public warning leaves space for that ambiguity to be managed. There is also a version of these events in which the IRGC's actions represent a final, face-saving assertion of capability before a negotiated settlement consolidates, a way of demonstrating to domestic audiences that Iran was not simply capitulating, that it retained the capacity to project power even in the context of a ceasefire. If that is the strategic logic, then paradoxically, the confrontation might actually serve the interests of de-escalation in the medium term by allowing Iranian leadership to demonstrate resolve without crossing the threshold that would trigger full-scale military retaliation. That is speculative, but it is a plausible reading, and it is one that the more alarming interpretations tend to overlook. Looking forward, there are several directions this situation could plausibly develop. The first scenario is managed de-escalation. In this path, back-channel diplomacy, which almost certainly exists even when not visible in public reporting, produces a mutual understanding about the boundaries of acceptable behavior. The IRGC's actions are treated as a final assertion of capability within a framework that both sides then allow to consolidate. Oil prices normalize. The ceasefire holds, if shakily, and becomes the foundation for a more durable arrangement. This outcome is plausible because it serves the interests of multiple parties. The U.S. does not want an active military confrontation in the Gulf. Iran does not want the kind of retaliation that a full escalation would bring, and Gulf states are deeply interested in economic stability. The probability of some version of this outcome is meaningful, particularly if the coming days do not see further significant incidents. The second scenario is continued gray zone friction. In this path, neither full de-escalation nor full escalation occurs. The IRGC continues low-level harassment of commercial shipping, testing U.S. resolve incrementally. U.S. forces respond to specific provocations as they appear to have done with the naval confrontation. The ceasefire becomes a nominal framework that both sides nominally reference while violating its spirit. Oil markets remain in a state of elevated uncertainty, with prices trading above their pre-ceasefire levels as a risk premium. This is arguably the most historically familiar pattern for this region, a state of managed tension that is deeply uncomfortable, but stops short of the threshold that would produce decisive action from any party. It is also the scenario most likely to produce the kind of shipping insurance cost increases and route disruptions that affect global trade even without a physical closure of the strait. The third scenario is significant escalation. In this path, an incident occurs that crosses a threshold that one or more parties cannot or chooses not to absorb diplomatically. This could be an attack that causes significant casualties, particularly American casualties, which would generate overwhelming pressure on U.S. leadership to respond decisively. It could be damage to a major piece of energy infrastructure that produces visible, verifiable economic impact. It could be an Iranian calculation that maximum pressure requires a more dramatic demonstration. If escalation of this kind occurs, the dynamics shift fundamentally. the logic of gray zone friction breaks down, and the parties are operating in a different strategic environment. This scenario is the one with the most severe economic implications, but it is also the scenario that all major parties have strong incentives to avoid. That it remains a possibility is reason for vigilance. That it is not inevitable is reason to avoid the kind of fatalism that sometimes takes hold in crisis coverage. What should we actually take from all of this? There is a tendency in the immediate aftermath of dramatic events to reach for either maximalist or minimalist interpretations. Either this is the beginning of a catastrophic wider war, or it is a minor incident that markets overreacted to. Neither of those framings tends to age particularly well. What we can say with some confidence is this: the events of that Monday revealed several things simultaneously. They revealed that the April ceasefire was not a stable equilibrium, but a contested pause in a competition that has not been resolved at the level of strategic interests. They revealed that the IRGC retains both the capability and the willingness to act in ways that threaten commercial shipping and regional stability, even under conditions of active ceasefire. They revealed that U.S. forces are actively engaged in the region and willing to respond to provocations in real time. And they revealed that the global economy's exposure to disruptions in and around the Strait of Hormuz remains a genuine structural vulnerability, one that decades of discussion and some investment in alternatives has not eliminated. The Strait of Hormuz is not a new problem. It has been a strategic concern since at least the 1970s, when the first oil shocks brought global attention to the architecture of energy supply. What changes over time is the configuration of actors, the available capabilities, and the political context in which decisions are made. What does not change is the underlying geography. That narrow passage remains what it has always been, a physical fact around which the interests of multiple powerful actors converge and sometimes collide. Understanding it clearly, not through the lens of the most alarming possible interpretations, and not through the lens of complacent dismissal, is the only foundation on which sound judgment about what comes next can be built. The situation as of the immediate reporting was fluid. It remained to be seen whether the events of that Monday would prove to be a turning point or an episode. The answer to that question would depend on decisions made in the coming days and weeks by people operating under conditions of uncertainty, pressure, and incomplete information. Much like everyone trying to make sense of these events from the outside, that is perhaps the most honest thing that can be said. The uncertainty is real. The stakes are real. And navigating both requires the kind of careful, evidence-grounded attention that the noise of crisis coverage does not always make easy.